Hi, my name is Scott Dahl. Thank you for tuning in to another one of my podcasts. I wanted to put this up because we have another bullish technical formation that just occurred that points to significantly higher prices. Now, we've had new highs, obviously, but I feel that we're moving higher. I'm not prognosticating. What I'm doing is giving you, from my 40 years of experience, what I believe to be the odds of probabilities. Now, when you have these bullish formations, when you have several of them, same kind, different kind, the more you layer on top of each other, the more that gives you the probability that we're in a strong trend. And that's what I'm going to show you right now. So if you take a look at the S&P 500, these price gaps, here's a gap right here. Here's April 14th, this line. This gave me this is a Standard & Poor's 500. This is a daily chart. On April 14th, we were trading right around 6,900. On April 14th, 6,972, right in that level. These price gaps gave me an upside target of 7,500. So we're at 7,249 today. I'm recording on May 1st. It's about 9:30 Pacific time. And the target from this gap was 7,500, which I gave you on April 14th. What we have now is we have what's called a flag. I've explained flags in previous podcasts, and here is the flag formation. This is the actual flag flapping in the wind here. This is the staff. So we have the staff, we have the flag. So the flag is a counter trend move, which you need that in order to propel this market higher. You have to have some stabilization, some sell-off in order to build up steam again. This is called the continuation pattern. This flag points to a higher price, close to 8,000 in the Standard & Poor's 500. I want to emphasize, I am again not predicting that we're going to be at 8,000. I'm saying the odds of probability from my experience from reading these charts, this is where we're headed. Also, you see where it broke out here on this flag. This is volume. That volume on that day was very high. So when you have a confirmation of a bullish technical pattern on high volume, that gives it even more credence. What could stall this? If this rolled back over and took out this low of this flag, then we would probably be in a consolidation phase. However, I think this is significant evidence that we're continuing in our cyclical bull market. This sell-off was fearful. There was extreme bearishness quickly, and that felt like a correction to me. I stated that. It turned out to be a correction. Why are we going up so high now? April was the biggest month we've had since 2020. Why are we going up so significant now? Why so fast? Because of the fear of this sell-off. It was like taking a beach ball, holding it underwater in a pool and releasing it. Boom, took off. And so we're layering these technical formations. S&P 500 has a target of 8,000. Let's look at the other indices. NASDAQ Composite. These gaps gave me a target on this day, April 14th. It was trading right around 23,900. This gave me a target of 25,927. We're almost there. Today we're trading at 25,153. This flag formation here in this indice gives me a target of 29,212. So I'm going to say that the probability is the NASDAQ Composite is going to a little over 29,000. I also want to point out that when you develop these targets off of these technical formations, typically the move will exceed the target. But the target on this from these charts, 29,212 on the NASDAQ. Let's look at the Dow Jones. Dow Jones broke out of this flag with good volume. This gives us a target on the Dow Jones of 53,485. Now, that's new highs. It's going to have trouble up here. See these highs here? It's going to have trouble with those highs. So I'm not saying it's going straight there. I'm saying that these are the probabilities of trend following. And when we take it out, if we go through this low here, but it looks like to me this market's moving higher. Now, again, I want to state that if you're a stock picker, you have the probability of beating the indices this year. Indices look bad. They turn around. They're looking better now. But if you can pick the right stocks, typically momentum stocks, the stocks that are pulling this market higher, if you can be in the right sectors, industrials, for example, it looks like there's talk of a renaissance in U.S. industrials. But if you pick the right sectors, if you hit the right stocks, the high momentum stocks, obviously within your risk tolerance, and you have a probability of doing better than the indices this year. And I think this will be a good year as the cyclical bull market continues. Call me if you have any questions, 949-497-6366, dahlcapitaladvisors.com. You can email me, scott@dahlcapitaladvisors.com. Thank you. I'm going to come up again when I see something that's important that I need to discuss. Call me if you have any questions.